Good evening. Welcome to the ShadowTrader video weekly for Sunday, January 15th, 2012. In recent Ask the Shadow columns, I've been giving the market a grade of a C+. Just now, the market actually came back into my office here at ShadowTrader University and said, "Professor, I want to dispute this grade. I don't think I should get a C+. I think I should get better than a C+." And I said, "No, market, you get a C+." And therein, the market just sort of sulked off into a corner and traded back and forth inside value in a very balanced manner, as we call it in market profile terminology. So if we look at the daily chart of the S&P, that's what happens when you have small body candles like this with some shadows to the downside and whatnot. I'm recording this on Friday evening after the market has just closed, and note that the market did not find acceptance down here in any of this choppy area here. There was huge consolidation here at 1280, and then the market lifted out of it. This was a very difficult trade to make, basically non-existent. The market's been very difficult over the last few days because this push here that would seem obvious all happened inside of a gap. Those of you that have been trading over these last few sessions, you'll know that, right? That was actually a gap higher. Look at the spider going backwards. You can see here. That was right in here, right? That was 110, and this is all pre-market action. And then right here, market opens up here. So this is all pre-market action. So it's very difficult actually to get in there with any sort of movement here on the 10th off the open, because it really, the SPX doesn't show it, but if you look at the spider daily, this is a much clearer picture, as I just showed you in the intraday. There's 110. So you had consolidation in the gap up, and then since then it's been what I call balancing inside of value, meaning that the value areas where 70% of the futures volume is going off in the prior day are just constantly overlapping each other, and we're seeing that. Today we actually were very bearish off the open due to some rumors out of Europe, S&P downgrades and whatnot, but then once again the market just rallies back and basically finds acceptance in a slightly higher area and won't act responsibly and just sort of rejects these lower prices. So basically the market's just having a difficult time here, not going anywhere. That's why I think the best way to think about it is to give it a grade, and as I was saying, to me that grade is just C+. Now it's getting that C+ in the context of this weekly pattern here, which I'm going to use the SPX for that. SPX weekly, and I still maintain that this is the dominant trend. There's some people talking about a trend line break here, which is true, and saying, look, the market made it through here and it's crawling higher. That is the case, but if you look at the dominant trend line of 2011, it has to be this. It's got to be this higher area. This is the real one here, especially since the start point of the trend line here is starting where? At the high point for the year, right? This is your 2011 high, so it makes perfect sense that you would then draw down, get that next. We back off. We have another rally higher, right? And then that rally fails, so you want to draw right to where the peak of that rally. And that's why I've been talking about my 2012 target in the S&P at the 1310 to 1320. It's probably going to be a slightly wider range, but you can see right here the trend line on the chart goes to exactly about 1314. So it feels to me like the market is just inching towards that direction, and as I've been saying, I give it a C+ for the type of action that it's been happening. Overall volume is not really increased. We still are also somewhat overextended from the lower trend line, so don't be surprised if when we come back into next week we could easily sell off a little. I'm not calling for that. It's really impossible to tell right here, but the trend could be intact all the way down to 1250. A lot of guys, you keep hearing them say, well, market's not really showing its hand unless it's over 1300 or under 1250. That's a really relatively large range, but in effect, it's really true. So all we can do is, as the market moves higher, to me, we can try and assess how it's doing. And to me, it's just not doing that good of a job. It feels like there's a lot of push-pull here. And, sentiment is sort of arguing as to whether they want to be in the markets long-term or not. And remember that the market itself, over time, is always going to be driven by those long-term participants, the Short-term guys, the guys who day trade, the guys who trade the futures back and forth just during the day, they are not the ones that really move the market. The market is moved by the larger players, the institutions, the pension funds, hedge funds, etc., and they play for the longer term. When they go into a market, they're not really that concerned about exact technical levels. They just want in. They don't trade overnight, for instance. You see this action overnight in the futures, and you wonder, what's going on. Trust me, those guys are sleeping. They're not putting money to work at 3 in the morning. So it's very apparent here that the long-term money is not really making a bet either way. So what I think we have happening is the shorter-term players, you can call them the weaker hands, they are sort of batting the market back and forth here within this range. So that's pretty much where I see things as of now. Again, I still maintain the market gets about a C+ thus far this year. If it closes a weekly bar well over this area, and I do mean well over this area, maybe it'll get a little bit higher grade, but not. My target still remains that area. Obviously, if you look at all the action over the past week and in the week before that, we're higher than where we started, right? I mean, we started here in the beginning of the year. This is the first trading day of the year. We ended here, correct? Now we're here. So obviously, value keeps sort of floating higher, but is doing so in a very overlapping manner where the days are not clean like this. That's another trick you can use to look at how well the market is going in the direction it's going. If you recall in prior Ask the Shadow, I think it was last week's, but don't hold me to that, where I said there's only two main things you have to concern yourself with, and that is what direction is the market going and is it doing a good job getting there. When the market is doing a good job getting there, the chart is clean in that it has less overlapping areas. So for instance, in this movement here from November, from the mid-November to the end of November, the market was doing a very good job getting there. The market was going lower and it was doing a good job. Notice that the candles are not overlapping. Okay, here the market is going up, but it's not doing a good job getting there because the candles are constantly overlapping. Prior day's ranges define the next day's range and on, right? And the ranges tend to overlap. So that's very important to note. So market generally inching up to the 1310 area, and we'll reassess the situation when we get to there. I do think it's a short. I think there's going to be a playable short at the 1310. I will definitely initiate new shorts there as you'll have a very good reference point as to where to cover, and we'll take it from there and we'll see how far back the rollback is. If from there we see large amount of selling, such as a very strong weekly bar with good emotion, then obviously we have a much better chance of holding a short for a longer time frame. If the pullback is minor, then and there's just sideways action, then you have to be thinking, okay, on the next test of the 1310, you have to close the positions and it goes higher. But once again, how will you know that? It's all about how good of a job is the market doing getting there. So if the market goes to that 1310, I'm thinking that the next move is down. I have to be analyzing day by day, looking at the candles, looking at my market profile, looking at market internals, asking myself, is the market doing a good job backing off from that resistance point? All right. Enjoy the 3-day weekend. Monday is a market holiday. Martin Luther King Jr. Day is on the 16th. New York Stock Exchange is closed. Be safe. On behalf of myself, the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.